Now we discuss about the concept factor cost and or factor payment, market price and transfer payment. What is a factor cost? The factor cost is the amount paid to the factors of production, that is land, labor, capital and organization, for their contribution in the production in the form of rent, wage, interest and payment. It is also known as the factor payment. Next is the market price. What is the market price? It is a price at which the commodity is sold in the market and the buyer buy for the commodity. In this formula, MP is the market price, which is equal to factor cost plus NIT is the net indirect tax. Net indirect tax is nothing but the difference between indirect tax and the subsidy. Here the indirect tax is the tax on the goods and services produced. Net indirect tax, it is the difference between indirect tax and the subsidies. Indirect tax is the all types of taxes on the goods produced, manufactured, selling and transporting. Here now it includes the GST is the indirect tax, and the subsidy is the financial assistance by the government to the enterprises in the production of certain commodities. Here as an example given as compensation for selling goods below open market price. Second is to encourage export, and third is to encourage employment. Next is the transfer payment. It is a payment received without any corresponding production of goods and services. Examples are the pensions received by the employee and the scholarship received by the students. Here this transfer payment is not included in the national income accounting. So this transfer payment is again classified into. Here transfer payment is classified into current transfer and capital transfer. Current transfer includes old age pension, unemployment allowances, and capital transfer includes investment grants, capital gains tax, etc. And the following is the distinction between transfer payment and factor payment. Now we discuss about the aggregates of national income. In this we are going to discuss about gross national product at market price and factor cost, gross domestic product at market price and at factor cost, net domestic product at market price and factor cost, and net national product at factor cost and market price. Here GDP at market price, it is defined as the market value of all goods, final goods and services produced by all production units within the domestic territory of a country during the period of 1 year. It includes depreciation and net indirect tax, and it is the income with the residents and non-residents. Here gross domestic product at factor cost is given. The formula is GDP at factor cost is equal to GDP at market price minus net indirect tax. And next is the net domestic product at market price. It is calculated using the formula net domestic product at market price is equal to GDP at market price minus depreciation. And next is the net domestic product at factor cost. It is known as domestic income, and it is calculated by using the formula NDP at factor cost is equal to GDP at market price minus depreciation minus net indirect tax. And next is the gross national product at market price, and it is calculated by using the formula GNP at market price is equal to GDP at market price plus net factor income from abroad. Here net factor income from abroad. Other important concepts are national income at a constant price and current price, gross national product at a constant market price and current market price, and GNP deflator. Here national income at constant price is known as real national income, and at current price is known as monetary national income. And GNP deflator, it is calculated using the formula GNP deflator is equal to nominal GNP divided by real GNP into 100. Now we can see on a problem relating to this national income aggregates, that is a calculation of NTP at factor cost. In this problem, it was given GNP at market price, subsidies is given, depreciation, factor income received from abroad is given, and indirect taxes is given, that is GST. Here we have to calculate NDP at factor cost. The formula is GNP at market price minus depreciation minus NFIA, that is net factor income received from the abroad, minus NIT. So for to calculate this, we need GNP. Here the given is GNP at market price is given, that is 16,000, and depreciation they have given 1,000, and net factor income from abroad it is also given, that is 1,400, and indirect tax is given 1,300 minus 1,200, that is the subsidies. So applying all these data in this formula, we are getting 13,500. It is the national domestic product at factor cost. Like this, we can apply all the formulas to calculate national income aggregates.